We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side.
That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Stefan Gleason, president of Money Metals Exchange and also a director of the Sound Money Defense League. How are you today, Stefan?
Hi, Tom. Thank you for having me on. I always enjoy your shows. When I go out running, I always have it on my iPod. So I've been a listener for a long time.
That's awesome. I appreciate the support, and I want to congratulate you on winning Bullion Dealer of the Year by Investopedia. Thank you. That was a great. That kind of came out of the blue. We didn't know they were doing that, but they said we were the best overall dealer in the United States, and I think that the reason that they gave us that was because of not just our pricing and our service, but the array of services that we have that many of our competitors don't. We have a fully integrated depository. We have a program to lend against precious metals. If somebody wants a line of credit against their own gold in our depository, they can actually do that for business purposes. And our Sound Money project, which we're going to talk about today, some of those things I think kind of helped, but we don't take that for granted. There's a lot of good dealers out there. Yeah, that absolutely makes sense, Stefan. So, of course, you're the president of a bullion dealer, and I'm sure there's a lot there we can dig into, but as you said, we're going to dig into a bit more about the discussion around sound money related public policies. So why don't we start by defining what sound money is to you and how you define that? Sure. Well, sound money is, the idea of sound money is stable money, money that holds its value over time, as opposed to political money or fiat money, which is, based on nothing tangible, but is really at the whims of the political leaders, of the central bankers. And so as a result, you have a very unsound money, a money that's volatile and that generally has been depreciating. But the idea of sound money is, storing purchasing power over time, not having huge amounts of variation in the purchasing power over time. And gold and silver have essentially been chosen by the market over the last 4,000 years as the money that sustains, and preserves purchasing power. And so that's probably the greatest example of sound money. But there are other things that could be sound money theoretically. But so the idea of sound money is really the opposite of what we have today, which is political money, fiat money, and government control and monetary policy through, or I should say, economic policy through government central planning, where the currency is one of the main tools used to control the economy or plan the economy. And that's, Keynesian economics, as opposed to the Austrian school or the hard money or sort of the sound money oriented economic thinkers who have basically been completely run out of the, academia. That school of thought has been, essentially eliminated from legitimate discussion over the last 100 years or 75 years since the New Deal. It's starting to come back. There's many of these people are prominent thinkers and are becoming more prominent, but the general mainstream is Keynesian economics, and that's very contrary to the principles of sound money. Excellent. So you have a sound money index on your site that ranks all 50 U.S. states' monetary policies. So what does this index try and help illustrate? So we've been focused on public policy for at least the last 5 or 6 years as one of the areas that we think we can do some good for the industry and for our customers and for the country. And of course, the main problem originates with federal policy. The Federal Reserve System, the removal of gold and silver from the monetary system, and of course, the most recent and the most significant event was the removal of the last link to gold in the early 70s, which led to an explosion in government debt. There was no longer any tether or any restriction on the issuance of new currency units after we violated and broke the Bretton Woods Treaty temporarily. I think was how it was framed at the time. So if you look at what happened with government since then and government debt, it's like a hockey stick. And the debt expanded dramatically and government expanded dramatically since the early 70s. So anyway, I just want to start by pointing out that the main problem is federal policy, and we have some legislation addressing a couple of the areas there, but there's of course huge problems with the Federal Reserve System itself, and so on. But there are some things that states can do, and we've found that at the state level there's a greater possibility of affecting positive change on the public policy front. And while we are still involved in federal policies, really the successes that we've had in the last few years have been at the state level in certain states. Obviously, there's an opportunity to create competition between states. Some states are more central, or I should say left-wing sort of oriented than others. That does affect their policies on lots of things. It affects their tax levels. It affects the freedom of their citizens. And not surprisingly, those states are generally lower on the index when it comes to sound money. But we basically just looked at all the things that a state can do, either is doing or could do, that would reaffirm the role of gold and silver as money, remove taxation from it when you buy and when you sell, other areas of public policy, such as whether the state has a state chartered depository for precious metals, whether the state owns gold as an investment, say in the pension funds, whether a state has laws that harass dealers or even private investors who seek to buy or sell gold. And we can talk about a couple crazy things that states do on that front. We also looked at a couple things like whether a state owns gold in the pension fund, whether it has it as a reserve asset, whether the state owns gold bonds, whether the state issues a gold bond. None of them do either of those things, by the way, yet. But that's a topic. I think you had Keith Weiner on at one point, and he's pushing that issue and making some progress. But about 55% of the overall index scoring is centered around whether the state has sales tax when you buy precious metals or income tax on gains if you sell precious metals. And so that's probably the major issue. And, there's some remarkable differences between the states, though, on just those two.
So, Stefan, explain to us why a sales tax on precious metals is a silly idea, and maybe use the example of breaking that $5 bill that you use in that index.
Sure. Right. Well, when you're acquiring precious metals, you are simply exchanging one form of money. I wouldn't necessarily call it money, but we're told that it's money, for another. When you're buying a gold bar, for example, or a silver coin. And so you're just you're breaking the dollar into some other denomination of money, and in fact, in better money. And so most states, no, I shouldn't say most states, many states consider that to be a taxable event. They consider that to be something where you have to pay a sales tax of 5 to 10% on that. So that would be like going into a grocery store and saying, I want, 4 quarters for this dollar. And they said, okay, great. We need $1.07 before we give you the 4 quarters. And so it's kind of a silly idea. And fortunately, many states have recognized that it's silly to be taxing money, that this is money. And if it's not money, it's an investment. Some of them don't necessarily say it's money, but they are willing to acknowledge that this is an investment. And what other type of investment do you have to pay a sales tax on? So the idea of a sales tax is a consumption tax. It's the idea that you're the final user of this perishable good, that you have to pay. The last user pays the sales tax. On the wholesale level, when the business buys it from the wholesaler and then sells it and it gets distributed, there's no tax. But then the final consumer pays the sales tax. So that whole concept is totally invalid when it comes to gold and silver.
gold and silver is held inherently for resale, or if you're going to look at it as an investment, it's held for resale. It's not eaten. Well, I guess colloidal silver, you can drink colloidal silver, so in that case, it's consumed. But these things are gold coins, gold bars. These are not being consumed. They're not artwork. They are stored purchasing power. They're money, and they're an investment, and they're going to be sold again. And so the idea of charging a sales tax on that transaction is ridiculous. But 11 states out of 50 and the District of Columbia will tax that 100% in all situations, whether gold, silver, platinum, or palladium. They'll have a sales tax. There's about 10 states that have a sales tax on certain types of transactions involving precious metals. And then there are roughly about 30 states that 28, I think, that have no tax at all. 5 of them don't have a sales tax for anything. And then the rest of them specifically have a law, some of which we have helped pass in recent years. Many of these have been on the books for a long time, but many are recent. And so there are some, there's 22, 23 states that specifically have passed a law that specifically exempts all gold and silver, platinum and palladium, coins, bars, and rounds from sales tax. And so there's about 11 really bad states on that topic. And we have bills today that are still live in this current legislative session in 4 of them. We had one in Mississippi that unfortunately didn't even get a hearing. But we still have a sales tax repeal in Maine, New Jersey, Tennessee, and Arkansas, and Minnesota. So there's actually 5 where we still, even this session, have a chance of expanding that list of states that exempt sales tax, precious metals from the sales tax. So that's one area that the Sound Money Defense League has been focusing on, is promoting these repeals of sales tax on precious metals, and then at the same time defending against repeal attempts. So let me back up. So we have states where we're trying to expand the exemption, and then there are states where the other side has been trying to roll back those exemptions and in some cases outright repeal them. And so we've had some serious battles in, for example, Washington State. On at least the last 2 years, they have attempted to eliminate the exemption for sales tax on precious metals, and we stopped them. And that was actually a pretty big battle. We had a lot of grassroots people involved in that. On the other hand, we did lose Ohio. So Ohio, as of 2 years ago, did not have a sales tax on precious metals, and it does now. They repealed it. And there's all kinds of reasons why these things happen. That's a Republican legislature too, which is even more disappointing. But I think part of the problem there was that there was a big scandal about 20 years ago in our industry, and they tried to tie the sales tax exemption that existed to that old scandal involving a local dealer in the state that the state got into some big scheme with, and it blew up. So they called it the exemption. I can't remember the guy's name, but they put his name on the exemption and said, let's repeal the so-and-so exemption. And they were able to do it, and we weren't able to stop them.
Trying to maybe make an example.
We have 39, 40 if that hadn't happened. But there is interest in reinstituting that exemption. So we have friends in that legislature that are looking at reintroducing a bill to fix that.
Excellent. So, Stefan, how does this concept also go against taxpayers when holding metals and then having to report a capital gain when it was likely just a phantom gain that resulted from the depreciation of the value of the currency that it's measured against?
Yeah, so this is the big scam of inflation. That's why inflation is a tax, because not only are you losing purchasing power, but when you end up with capital assets that appreciate in value according to the currency that they're being measured in, you end up getting taxed on that as though you had a gain. But in many cases, it's not a real gain at all. It's a gain simply, it's a nominal gain that results only from the devaluation of the Federal Reserve note. Yet the IRS says you had a gain and you have to pay even more of your assets to them. And so that's the injustice. One of the great injustices of our inflationary system is that it slowly whittles away at people's assets and then it taxes them in the process. So the problem usually begins with the federal level again, because the IRS currently has the position that gold and silver is a collectible, gold bullion, even a non-rare coin, just a gold eagle or a gold bar. It's a collectible, and it's as a collectible, and this is without statutory backing, this position, but as a collectible, it would be taxed at a higher 28% long-term capital gains tax rate federally, whereas a piece of real estate or a bond or stock only gets taxed at 15% or 20% if your income's over a certain level. So gold and silver is already taxed at a discriminatorily high 28% long-term capital gains tax rate. Now, of course, as we just talked about, that gain isn't necessarily a real gain, but they call it a gain and you pay 28%. Then the states will typically follow your federal income number. So you do your federal taxes and then the states piggyback on that. And so if you had a gain in income, if you had income federally, then the state starts with that number and says, okay, here's your state income. And then they do their adjustments and then they charge you their tax. So if we could get Congressman Mooney's bill passed, which is called the Monetary Metals Tax Neutrality Act, then it would remove gold and silver completely from federal income, and thus remove the income tax from gold and silver. And then states wouldn't have that income included in the number they start calculating your state tax on. So that would be step one. One way of attacking this would be to pass Congressman Mooney's bill, which he reintroduced about 2 weeks ago. Then, though, some states have said, we're going to undo the error happening federally. We're not going to include or allow to be included gold and silver gains as income in state income taxes. So 3 years ago, we helped the state of Arizona, or our allies in Arizona, pass a bill that took gold and silver income out of the calculation of state income taxes. So it's if you had a federal gain, you subtract it at the state level. And the reason, and that was tax neutral, just like the federal bill. So if you had a loss that you deducted federally, then technically you would have had to add it back to your Arizona income. And I'm fine with that because, first of all, we're saying gold and silver should be a non-entity completely from a tax standpoint. And so, we don't necessarily need a one-sided giveaway. But on the other hand, most of the time, because of this inflationary system, there's going to be gains, because just by going nowhere, they're going to have a gain when priced in Federal Reserve notes. So our taxpayers will more often than not win with that kind of law, even though they might have to subtract, or I should say add back their losses if they had deducted them federally. So Arizona passed that law.
I was going to say, hopefully we don't ever have to really sell our gold or silver for a loss.
Right. Well, and unlikely to have to sell for much of a loss in this crazy inflationary environment that we're in, a loss from their standpoint anyway. So the law passed in Arizona. We had a law in Idaho. We only passed it through one house so that wasn't enacted. That would have removed gold and silver from the income tax. There is a bill in South Carolina right now that would do this. And we did pass such a bill in Wyoming. Actually, we passed in Wyoming with some help of allies in state and Campaign for Liberty based in state.
we were able to pass a law that said there shall be no taxes of any kind on gold and silver. No property tax, no sales tax, no income tax, no taxes. And it also acknowledged and reaffirmed that gold and silver is money at the state level. Under Article 1, Section 10 of the U.S. Constitution, it says that gold and silver is the money of the states. It actually forbids states from using anything but gold and silver as money in making payments. But that's fallen by the wayside, but that's still in the Constitution. So Wyoming eliminated all taxes. And there, I believe, is one other state. I can't, off the top of my head, I can't remember which it is, but that's another topic. Sales tax is sort of the main area of battle right now, because especially with the passage of, or I should say the ruling in 2018 of Wayfair versus South Dakota, which essentially imposed a sales tax on the internet, on internet transactions across state lines. So now this is something that everyone is having to contend with. Every online dealer, every customer, wherever you buy gold and silver, if you're in a jurisdiction that has sales tax, then you're going to be charged sales tax. And so it's become an even more important issue. But income tax is sort of a tier 2 issue that we're focused on. And then there's a few others down the way from there.
So Stefan, are there any possibilities, let's say, for somebody to go next door to a state that has more favorable, let's say, tax regime around gold and silver, and then bringing it back across state lines? Are there any examples of that you know that are, let's say, you don't have to declare necessarily, or do you have to declare all of those?
Okay, so there's sales and use tax. So sales tax, it's the same thing essentially, but if a state has a sales tax, they expect individuals to pay a use tax if the person from whom they bought the good didn't charge a sales tax. So there's actually a place on state income tax returns to say, here are the use taxes that I owe because I didn't pay sales taxes. Now that's something, tax bureaucrats recognize that most individual taxpayers aren't going to report that. And frankly, most of them aren't even know they have to report that. I mean, it's not everyone is a CPA and keeps every receipt and looks and sees, if they were charged this tax, oh, I owe the tax. Oh, they probably have no idea that gold and silver could be taxed in their state. But first of all, the way that sales tax is determined is based on the delivery state. So, for example, my company, Money Metals Exchange, has a depository in Idaho. So in Idaho, and there's no sales tax in Idaho. So if somebody is in a state where if we were to ship to them their purchase, we would have to collect and remit sales taxes to their government in their state, they could choose to store it in the depository in Idaho, and it would be lawfully exempt from tax because it was delivered into Idaho, and there's no sales tax on precious metals in Idaho. One thing that has happened in the states that are surrounded by jurisdictions that have no sales tax, and they're an island that does, people cross state lines and they go and purchase from a local dealer in the neighboring state and they bring it back. And that's happening. And I don't know. I assume that the bureaucrats in the state where that person brought the metals back might feel that they should report that and pay it as a use tax, but it does not have to be collected by the seller because they're showing up on his doorstep in a state where there's no sales tax. But what's happened, honestly, in these states that have sales taxes, and particularly now, because there's 39 states that have either some or no sales taxes on precious metals. But what's happened is the dealers in those states have gone out of business. It's, many of them have gone out of business or they've moved on to other things. It's not a big part of their business. Coin shows rarely, or I should say, there are a lot fewer big coin shows in those states as well. And so one of the arguments that we point out to these legislatures is that you're losing economic activity that is actually probably reducing your overall revenues, tax revenues. You're losing out because there's not going to be as many conventions in your state. And people are going to go to another state and purchase their precious metals, and your local businesses are going to go out of business. And that's been the case. In fact, in Louisiana, a few years ago, they briefly repealed the sales tax exemption on precious metals. And very quickly, some businesses started having big problems. They lost conventions in New Orleans and so forth, and they quickly repealed it and said, we made a big mistake. We cost ourselves way more than we thought we were getting. So, but that is a reality. I mean, people, when you're talking about 5 to 10% being added to the price of precious metals, especially with these things, the margins and everything, that it's a big incentive for somebody to figure out a way to store precious metals in a state that doesn't tax, or acquire them from a state that doesn't tax and take them back to their state. So I'm sure a lot of that goes on, and we certainly see a lot more, even more interest in our depository than ever because of this developing sales tax situation. And as I mentioned, in Idaho, like many states, there is no sales tax, and so it gets stored in the depository, no tax.
Yeah, it sounds like there's a lot of intricacies around how all of this works, and that resource on your website is excellent, and I encourage everybody to go look at it. We'll absolutely link to it in the show notes there as well, Stefan. So what does having a state with gold and silver bullion, what does having a state gold and silver bullion depository achieve?
Okay, so that there's one state that has such a system, and it's Texas. And this made the news, 5 or 10 years ago. They created a state depository system, and they had independent or private contractors all bid on being the state chartered depository. And so it's under the auspices of the state controller. So it's sort of indirectly a part of the state's regime, if you will. And it's not state run, but it's state overseen, I guess is probably the way. So, I mean, obviously that's a tricky issue. On one hand, I think there's benefits. On the other hand, I'm a private business owner, and I don't necessarily want to be competing against a government supported depository. But the theory on why that's a good idea is that there may be greater protection for such a depository, one that's under the state police powers of the state financial system directly, or even somewhat indirectly, in the case of a federal aggression, because states have the sort of preeminent position, states themselves, in being a protection, if you will, against a federal confiscation or something like that. So theoretically, a state-run depository would be in a better posture if the Fed said all gold has to be turned into the federal government. So, regulation in Idaho, we are under a regulatory regime with the State Department of Finance, and I think many depositories in their states have some level of regulation. But I don't necessarily think government intertwining with my business would be a good thing. And so I'm not really eager to be a state depository, so to speak. But it is a policy that we have on the index because we think that there's some merit to the idea. And in Texas, having a state that actually went through this process. Now, one thing that's interesting in Texas, part of the reason that whole thing was started is because Texas is one of the few states that has a very significant holding of gold bullion. And so part of the rationale for a state depository system was, why do we want to store this bullion that the state owns for the teacher pension fund? And they have like $1 billion worth of gold for the Texas Teacher Pension Retirement Fund. But it was in the hands of Wall Street. So, and they were paying storage fees, of course, which may be less if it was inside of a state or, inside the state. And
and inside a state charter depository. So I think that's what got the ball rolling in Texas was, hey, we got $1 billion worth of gold. That represents a few $1 million a year in storage fees. We're not real thrilled with the idea. And so to their credit, the people that involved in the pension fund who brought this up and others in the state said, hey, we don't necessarily want Texas's government-owned gold, which is supposed to help secure the pensions of our teachers, to be in the hands of Wall Street bankers and bullion banks, which may have hypothecated it or done something. And besides, it's costing a lot of money to store it there. We could create jobs here in Texas and store it in Texas. And so that's what started that. So in Tennessee right now, it's likely to pass. It's already passed one of the chambers, the Senate. There's a hearing tomorrow, Wednesday, the April 14th. There's a hearing in the House committee in Tennessee on a bill that would commission a task force to research having a Tennessee bullion depository. And so this is an idea, and there's also a bill in Texas that addresses the subject, and there has been a bill in Wyoming. So it's a valid idea, and it's one of the things that we rank in the index.
Stefan, what are some of the examples you mentioned earlier of laws that are intended to harass precious metals dealers and investors?
Yeah. Okay. So Arizona is the worst one, but there's basically 4 areas, and let's see if I can remember all 4. It has a lot to do with secondhand dealer laws, and these laws that police think that we could solve every crime if we made everybody report everything they bought that anyone would ever want to steal. And so the idea is that a local coin shop, when they buy something from the public, so say they buy jewelry, you go in and you sell a gold brooch. Well, maybe it was stolen. Maybe it's being fenced. And so a lot of states and localities have passed ordinances and laws that require the dealer who makes the purchase to hold it for at least 7 days or 14 days. Don't resell it. Don't melt it. Take photos of it. Upload those photos nightly to the county sheriff's office, along with the ID of the person who sold it to you and their hair color, their height. I'm serious. I mean, and so basically they want all of these transactions to be reported when you try to sell when a dealer buys something from the public. And so that's probably the main concept around that. Now, I'm not going to argue I have ideological problems with that for anything. But jewelry, okay, maybe there's some uniqueness, there might, theoretically some unique brooch, grandma's brooch, there's only one like it, whatever. But a gold bar, a gold eagle, it's ridiculous. These are all fungible. There's no rationale to say that could be identifiable, even if you thought it was a good idea, which I don't. But so a lot of states are dealers who buy from the public are forced to hold those bullion bars and coins for long periods of time before they can sell them, take tremendous amounts of information from the people that sell them to them, upload that to the police, which probably sits in some database they never look at. But the idea
that was something I was thinking about, is that I can't imagine how inefficient that system could be, even if you had bars with serial numbers on them.
Right. It's ridiculous. But it's basically a huge cost to those dealers because, for one, when you're in the bullion business, the tiny margins, you can't necessarily tie something up for 2-3 weeks. What if somebody comes in the next day and says, I want to buy, 10 ounces of gold? Well, you might have huge amounts of gold, but you can't sell any of it because you bought it all from somebody in the last 14 days. So, and then you have more in your coin shop safe. I've talked to dealers who've been robbed at gunpoint. There's more metal probably on their premises as a result of these kinds of laws. Now, in Arizona, it goes even further, and it literally the law in Arizona makes it illegal to use cash to buy precious metals. So you have to make an electronic transaction. I've never heard of any similar situation. Maybe somebody can point out another example of this, but I've never heard something where it's illegal to use a $5 bill to buy a certain type of good. But in Arizona, the statute says you cannot use cash. You have to do an electronic transfer. It has to be an electronic documented transaction. So, I mean, it's literally a ban on cash for one type of purpose. And so all of these things we call dealer and investor harassment laws. Investor harassment because the privacy intrusion, dealer harassment because of, tying up capital, becoming more susceptible to thefts, having a huge administrative burden, and then just, the idea that you can't even use cash is just beyond the pale. But there are a couple dozen states that have these kinds of things on the books, and there's many cities. So there's some situations like our main business is in Idaho. So Idaho doesn't have such a law, but several of the cities around the city we're in has such a law or ordinance. So we've been documenting that and added that to the index last year because I thought it was important to put that on the radar. And we have not introduced any bills yet to address those, but we're looking for opportunities.
So Stefan, you were telling me before we hit record here that your highest real score on the index is about 61, 62%. How does that provide basically an incentive for these states to keep getting better?
Yeah, well, I had a political background, and before I launched Money Metals about 12 years ago, I was in public policy, and we learned, over many years that you got to be careful about giving out a lot of credit when you're dealing with politicians, and because sometimes that's used against you. So if we were to say certain states are, the best states by far on these things, they have a 90%, 100%. There's very little incentive to, if to the extent people are looking at the Sound Money Index and saying, do we like this state? Is there anything more to do on the state? We don't want to give the impression that there isn't anything more to do. I mean, Wyoming is number one on the index, and they have a 61%. So the top 10 go down. Nevada's number 10 has a 40%. So there's a long way to go, and that's because they may have no income tax on precious metals. They may have no sales tax on precious metals. They may have a lower income tax rate, which we score, than the average state. They may own gold in the pension fund, like Texas. But there's many things they haven't done. They may have dealer harassment laws. They may not have a depository. They may not have protection for gold clause contracts, which is the idea that if somebody has an arrangement with some other person to be paid in gold over time, which used to be common. In fact, when the money was gold, essentially, and silver, every contract was essentially a gold clause contract, because when you were being paid in dollar bills, you were being paid in silver. And that's an important idea for long-term protection. So both parties know what they're getting paid in the future. Right now, if you have an agreement to receive dollars over the next 20 years, what are you getting? You don't know. It's probably going to go down, in value. Your wealth is being transferred to the other person over time. So the idea of a gold clause contract, I think, can come back in a way that people can kind of opt out of the dollar-based or Federal Reserve note-based system and say, we're gonna have a contract that's denominated in silver ounces or gold eagles or whatever. And so that idea of a gold clause contract is there aren't many of them out there. There's a paper by Edwin Vieira, which we could, if somebody wants to contact us, we can send to you, that talks about how these can be used. But the idea is that a state could, if you have a dispute under a contract and you go to the court and say, enforce this contract, we don't want the judge to say, well, he doesn't have gold, so he can pay you in dollars.
And that would be what would happen if you don't have greater protections for gold clause contract enforcement. And so, and this kind of sort of a narrow issue maybe to the listeners, but it's something that we think is important enough to put on the index is, does the state have special, or I should say, strict enforcement of these contracts where you cannot substitute Federal Reserve notes for gold if that's what the contract requires? And so there are states considering legislation on that.
Excellent. So are there, or what kind of progress can you share with us that's happening at the federal level?
So the federal level, most of it's negative, as people know. I mean, you've got, debt expanding dramatically. You have Federal Reserve bailouts in the trillions of dollars, even this year. You have a gold and silver eagle program. They mint gold and silver eagles. They can't mint enough. That's another issue. It's one of the reasons premiums are so high right now. But there are some things that are on the radar. Obviously, there was the audit the Fed bill, which Rand Paul had, and it even passed one of the houses a few years ago. That's kind of going back and forth as an issue that would be valuable, more transparency in the Federal Reserve System. Of course, the real problem is the Federal Reserve System itself, which should be eliminated. But some feel that auditing the Fed would kind of be a step in that direction, because then you'd realize, here's what they're doing behind closed doors. This is all manipulation. This whole system is rotten. Let's get rid of the Fed. Congressman Mooney has two bills that we're working with him on. And one is the one I mentioned earlier, which is the Monetary Metals Tax Neutrality Act. That would end gold and silver as something that can be taxed under the income tax. And then the other is the Gold Reserves Transparency Act, and that's the audit the gold bill. That's kind of what we're calling it. The idea that, the United States theoretically has large, I think 8,000 tons of gold, somewhere in that neighborhood on the books, but it has not been audited for almost 70 years. And even that audit was not a complete audit. It wasn't a complete inventory. So there has been no serious review of U.S. gold reserves for almost 70 years. And Congressman Ron Paul had a bill along these lines 7 or 8 years ago, and it was not complete. It was good. There was actually a little hearing on it, didn't pass. The Treasury came in and said, hey, we do check. Here's some of the things we're doing to make sure. But the issue with U.S. gold reserves is not just whether it's all physically there. Obviously, that's important. Is it all physically there? Where is it? How much of it is, good delivery bars? How much of it is, melt stuff that was collected back in 1933, coins and things that maybe are not, pure and that kind of stuff. But are all the ounces there, and are they properly secured? That's one layer of what should be audited and inventoried, and then actually inventory and assay the metal. So this bill by Mooney would do those things, but it also goes a step further. And this is the part, I think, of the bill that is even more important. And that is a full review of any encumbrances that have been placed against the United States gold. So just because it's in Fort Knox or in the New York Fed, building, or at West Point, does not mean that it's somebody else doesn't think they own it. I mean, it could have been pledged. It could have been pledged to the International Monetary Fund as part of a gold swap arrangement. It could have been leased. It could belong to China, but we're safeguarding it, so just because the gold is actually there doesn't mean that it belongs to the United States, and doesn't mean that other people don't think they own it. Now, I guess if you're the United States and China says, hey, we want your gold, or maybe that's not a good example. Germany says, we want your gold. And they did say that, and it took them 7 years to get it. I think they may have gotten it a little bit faster, but theoretically, the U.S. could say, well, too bad, it's in our country. You can't come and get it. It's our gold now, and that's, of course, maybe that's what they fall back on. But there needs to be a full examination of all of these transactions that may have occurred involving the United States taxpayers' gold. And so Mooney's bill does all of the physical stuff, but then it looks at this accounting stuff, which could be the most revealing part of any audit that's done.
And so he introduced that bill last year for the first time, and then in the last session, I should say, and then that's going to be reintroduced in the next month or so. So beyond that, I mean, there's commissions to have a study going back on a gold standard. That's been discussed. There's some things that can be done at the U.S. Treasury I think I mentioned earlier that there's no statutory basis for this 28% income tax. So the U.S. Mint mints gold legal tender coins and silver legal tender coins. It could itself, the U.S. Treasury could say these are not going to be taxed. They could do that without legislation. There were some groups that we were working with and talking to that were pressing the Secretary of the Treasury in the last administration to do that. But I think it's a pretty bad scenario right now. I think in a crisis, some of these things could come very quickly to the forefront. But at the current time with the Biden administration, not that this is a partisan issue, but they need this system to perpetuate of money printing and the Fed stepping in and monetizing the debt. So I don't think we have much chance of doing anything at the federal level. That doesn't mean we shouldn't keep pushing, but I'm very optimistic at the state level because we have had progress there. We've only gone in, other than the loss in Ohio, which I mentioned, we've really only gone in one direction, and that is towards more protection for sound money and lower taxes or elimination of taxes on gold and silver.
Absolutely, Stefan. That's it's very interesting the way that all those things are developing. And I just had a discussion with Chris Powell of GATA and talking about how many times let's say the US's gold could possibly be rehypothecated. It's just crazy to think about.
Yeah. And they do a very good job there, GATA. I really appreciate them. And I think they're doing a tremendous service to the entire gold ownership community, for sure.
So, Stefan, I want to be respectful of your time. Why don't you tell us quick about one interesting program that you have, and it is the contribution every month to basically a savings account.
Oh, okay. Yeah, thank you for asking about that. I didn't realize you'd seen that. So this has been something we've had in place since the very beginning at Money Metals, is a monthly savings plan. And it's very popular. We have, I think there's about 5,000 or 6,000 people currently in the plan. And these are folks that have basically enrolled to have a scheduled monthly purchase of a certain amount or a certain number of ounces. And it just like, dollar cost averaging into your stock account. This is a way to put it on autopilot to stop, sort of the guesswork around timing the market, just get into a disciplined program that just happens automatically. It's sort of like taxes. So, one of the big problems with the income tax is that, a lot of people don't realize how much they're paying unless you're a small business owner and you have to write a check, because it comes right out of your paycheck before you even see the money. And so at the end of the year, people get excited. They, I got a $2,000 tax refund. I beat the system. But really, they loan money interest-free to the government throughout the year and got a little bit of it back. But the idea of this is harnessing that principle, of automation and default. And so the default with the monthly plan is every month, regardless of what happens with gold and silver prices, regardless of what you're doing, unless you pull out of the program, you have an automatic purchase that just happens. And then people will have us ship it to them every 3 months, or they will store it in the depository. Most people have us ship it. And most people have us automatically debit their bank account. No charge for that. It just happens automatically. We send you the invoice. Your bank account is debited, and then you've acquired another $300 worth of gold at whatever price it was, or $300 worth of silver. The minimum is $100 a month, and you can change products. You can switch that around. You can have both a gold and silver plan at the same time. You can have a store it. You can have a ship it. And there's, most of the products that we have, at least all the popular products, are available in our monthly savings plan.
Yeah, I think that's a great way to, like you say, automate it and kind of take it out of your own hands, and it provides a great way to dollar cost average as well. I encourage all of our listeners to go check out your website. You have the Sound Money Index on there, the Money Metals Insider Quarterly Report, the savings account. Why don't you tell us what it is and where we can find more about you and the company, Stefan?
Great. Well, thanks again. I appreciate the opportunity to talk about the public policy stuff, because it's not something that I haven't heard it covered on your podcast, and it's an important aspect. So I really appreciate the opportunity. Money Metals, we're one of the largest dealers in the country. Moneymetals.com is our website, and there's lots of content on the site. We're also a publisher, if you will. We have a free print newsletter that goes out quarterly to all of our customers. We send out content almost daily, news articles or certain topical articles about the precious metals markets, about the public policy stuff, about any topic related to precious metals and gold ownership. So we're also a pretty good sized publisher in our space, if you will. So we're not just about selling. We're about educating. We're about guiding people on pitfalls. One of the things I should mention, one of the early things about our company was we were founded in part because of these rare coin dealers that were doing the bait and switch. And I was in a publishing industry. I had before I launched Money Metals, I had a publishing company for a short period, and the only advertisers that could afford to publish or advertise in our publication were the rare coin dealers that have 50% markups. And, generally the people you see on TV. And so one of the early things with their celebrity spokespeople, Charlton Heston, and he's not around anymore, but, folks like that. So they're still a major force in our industry. Unfortunately, a lot of folks are being taken for a ride, paying huge markups, finding out they lost half their money on day one because of the premium. And so we've always been focused on education. And so one of the early things we focused on was, hey, here's why this is bad. Here's how you avoid the pitfalls. Here are some of the phony stories they tell you to try to get you to buy their overpriced rare coins. And no knock on collectors. There are true rarities out there if you know what you're doing. But for the vast majority of people, they're not trying to buy a piece of artwork. They're trying to buy a piece of gold. And so focusing on melt value and things like that are what you want to do. So we've always had an educational component. And then we also have a depository. We have a program you can borrow against your gold for business purposes, like a line of credit, like a home equity loan. And we have the monthly plan. And we work with IRA companies and that kind of thing. So we'd love to help people on any of those fronts. And you can go to our website, moneymetals.com, get on our free email newsletter. And if you become a customer, you'll start getting the print newsletter. And so we'd love to help anyone, especially in these times. One thing that we've noticed is a lot of our competitors are having trouble with inventory. Not that it's easy. We're not flush with inventory on a lot of stuff, but we pretty much have every popular item in stock for gold and silver. And I think that differentiates us also. It seems that we're doing really well on the sourcing side. And so you can find probably what you want at Money Metals right now.
Excellent, Stefan. And, I appreciate you bringing up the, let's say the taxation issue and that index, because I will agree. It's not necessarily the sexiest topic, but it is something that we haven't covered yet on the podcast. Stefan, I really appreciate your time, and hopefully we'll hear more from you in the future.
Thank you very much, Tom. I appreciate it also.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.